Welcome grade 12s. Yes, time for accounting. Once again with Ashraf Patel. Exam time and therefore revision. Revision. What are we looking at today? I'm sure you can see the excitement in my eyes. Why? Because it is the cash flow statement. That's right. Now you can see here what I've done for you. I've said that if you can understand these basic concepts with regards to the format of the cash flow statement, then half your battle is won. In other words, your cash flow statement is broken up into three sections, namely your operating activities, right? Your operating activities, then you have your investing activities, and then finally you have your financing activities. Okay, now if we look at operating activities, we say that if you look at the most common source of cash for any company, it involves, yes, the buying and selling of inventory. That means, obviously, your sales, right? You also look at your receipts from your debtors, right? Your payments to your creditors, and obviously the payment of expenses. Now, all of this leads you into thinking in a particular way. So, when I'm talking about operating activities, I'm talking about the day-to-day running of a business in terms of buying and selling, paying debtors, receiving money from debtors, paying creditors, paying your expenses, operating activities. So, cash from operating activities. Then we go on to investing activities. What are we looking at? We are looking at what happens to your cash as a result of buying and selling of tangible assets. Now, obviously, the question arises, a company does not buy an asset with the intention of selling it. Why? Because they're buying it to use it. But you would have to face a time where an asset has become obsolete, outdated, old, and needs to be replaced. Then certainly you're going to have to sell that asset. And very often in this particular section of the work, you find that learners tend to forget the investment of your fixed deposit. So, with regards to my investing activities, I'm looking at tangible assets. I'm looking at the proceed of the sale of my tangible asset, 1. 2, I'm looking at the purchase of my tangible asset. And 3, I'm also looking at what happened to my fixed deposit. Clear on that? Great stuff. Now, when it comes to financing activities, here again, what are we looking at? We are looking at 1, the issuing of shares, the proceeds of the shares that have been issued, right? We're also looking at the paying off or the receiving of loans, right? And yes, another important one is your buyback of your shares. That means when it comes to the cash flow component, you want the buyback of your share. And here I want you to focus, because the buyback of the share deals with the entire price that we paid for the repurchase of those shares. Not the average price, not the price above the average price, but the entire amount that we spent on the buyback of those shares. Okay, now, I'm going to give you a minute to jot down for me what would you regard as inflows when you're looking at these three categories that we have discussed. It means under operating, I want you to give me inflows. Under investing, I want you to give me inflows. And under your financing, I want you to list for me items that you would regard as your inflows. You got a minute today to do that. Go for it. Okay, grade 12s, let's check. Do you have these items here with regards to your inflows? Remember, we're talking about monies that we're receiving from our sales. We're talking about other monies that we may have received from other incomes, like what? Come, you should be able to explain this, because we're talking about rent income or any other income amounts where we have monies that we are receiving. Okay, when it comes to inflows with regards to our investing activities, what are the items that we have? We have monies received from the sale of the asset. In other words, and this is important, please make a mental note of this here. We're looking at the proceeds of our disposal. In other words, at what price did we sell that asset for? Now, again, another reminder, because reminders are beneficial. When it comes to an asset disposal, with regards to a cash flow statement, in other words, where there's a disposal of an asset and you are expected to do a cash flow statement which has in it an asset disposal, then remember that we will dispose of the asset at carrying value, where my selling price will be equal to my carrying value. In other words, no profit or loss on sale of asset. And that's what we want. We want the selling price of the asset in order to show that as an inflow of funds. And then also we have our fixed deposits that are maturing. Remember, when a fixed deposit matures, money is coming into our bank account. The fixed deposit is now available to us in our bank account, so it's an inflow of funds. Okay, when it comes to financing activities, we're looking at two things. We're looking at one, the monies that we are receiving from the issuing of shares. In other words, when you sold new shares, what was the proceed of that? How much money did we have coming into our bank account? At the same time, if you're receiving a loan, it means that money is flowing into your bank account. Grade 12s, when you think in cash flow, think cash. Think of the impact on your bank account. At all times, that is of paramount importance. Okay, now we're going to give you another minute, and this time we want you to determine your possible outflows within the categories of what? Operating activities, financing activities, and definitely your investing activities. Go for it, guys. You got 1 minute to list your outflows of cash. Okay guys, with regards to the outflows, let's see if you've mentioned this in your list, right? Watch. Outflows, we are referring to the outflow of cash. So every time we involve in a transaction, the question that you need to pose is, what is happening to my bank account? Money paid for stock, obviously when you pay your expenses, right? Very important when taxation is paid, and certainly when you pay your dividends. So all of these would impact on the bank in a negative way, meaning an outflow of funds. And yes, important, in cash flow, no bracket, no mark. That means you show your outflows in a bracket to indicate an outflow of funds. Okay, with regards to my investing activities, what are we talking about? If we are paying money to replace a tangible asset, then certainly that means we have purchased the tangible asset, an outflow of funds. If we are buying new assets, same story, in a bracket indicating an outflow of funds. And then, if you are taking money and placing it in a fixed deposit, that means you're making an investment, you're taking money out of your bank account is decreasing in value, therefore that would also appear in a bracket. With regards to outflows and financing activities, certainly the money that is used to repay your loans, obviously it's an outflow of cash because you're repaying the loan has become less. And a distinct one that we need to add to this list would be certainly the buyback of your shares. Clearly you can see that within the buyback, it is the total price that you want, which is made up of two components. It's the average price of the share plus the price above the average. Okay, so in other words, what are you looking for? You're looking for the total bank figure, which is represented by an outflow of cash. And then a cash flow would not be complete without, yes, our German friend. You remember our German friend? Okay? And our French friend. Let's see if we remember these two friends we have that assist us with the cash flow question. No correct pronunciation, however you pronounce it, as long as you understand it, let's go for it. Ayulir. What does it mean? It means when an asset increases in value, we are utilizing funds. Do you recall the utilized tells you that that figure will be in a bracket to indicate an outflow of funds. And when a liability increases in value, we are generating funds. That means that funds are flowing into the business. Got it? Okay. What about my French friend? Gr12. Yes, what's that all about? When an asset decreases in value, we are generating funds. That means there's an inflow of funds. Your bank account is increasing in value, right? When liabilities are decreasing, we are utilizing funds. Once again, watch, whenever there's a utilized, the U tells you that the figure has to be in a bracket. The U formation gives you an indication when you are drawing up your U. Can you see? The bracket formation tells you that that figure has to be in a bracket. Right, now, having done all of this here, we are preparing you for the question. So guys, if you want to have a look at a question where we're working out items that are missing in the cash flow statement, then take a quick break. Make sure you have a quick 1, 2, just to freshen up. And when you come back, we're looking at an actual question on the cash flow statement. See you in a jiffy. Welcome back, grade 12s. Yes, like we promised, we're looking at a cash flow question. You are provided with information relating to Utukela Limited, a public company. The financial year end is the 31st of August 2014. The authorized share capital of the company is 800,000 shares. That's the maximum number of shares that the company is allowed to sell, authorized. Okay, what are we expected? What is required of us? To prepare the cash flow statement, and we are also told that look at your answer book. Certain amounts have already been entered into the answer book for you. Right, now, what information do we have? From my income statement, I'm given the cost of sales, depreciation, income tax, interest and loan, profit before tax, cash generated from operations. I'm given information from my post-closing trial balance with regards to equity, etc., etc. There's a whole lot of information that I have there. And I'm also given information regarding fixed assets and my ordinary shares. So all of that information is given to me. I will go on and look at my cash flow statement. And the first thing that I require, right, is my cash generated from operations. So immediately, I look at my given information and I say, fine, what am I given? I'm given my cash generated from operations. Generally, you are expected to work out this figure, right? How would you calculate your cash generated from operations? Remember, you would start off with your net profit before taxation, right? You'd add back your depreciation, you'd add back your interest that has been paid. Those two items are added back. That will give you your changes before working capital. You'd look at working capital, you'd look at receivables, you'd look at payables, and you'd look at your inventories. Right, those three items, once you've done all of that, that's the answer to note number 1, which is cash generated from operations. So in this particular question, that figure is a given. So it's 4441960. So immediately I say fine, 4441960, slot it in. That is my cash generated from operations. Okay. If I look at this note further, I see that the interest is given to me, my dividends are given to me. I need to work out my taxation that has been paid. And in order to do that, let's go back and see what information do we have. Right. Firstly, what's important to note is that you want your taxation that has been paid. Now, obviously, the method that you use to calculate taxation that is being paid is entirely your choice. Remember what I say. What I find the easiest when we're working out taxation paid is the following. Watch. It's your SARS income tax account. Step number 1. A cash flow statement, grade 12s, is about procedure. Step number 1, find your opening balance. Your opening balance for SARS income tax. Yes, what has Ashraf forgotten? The love arrow. Very important. Beginning of the year, end of the year. Love arrow that is misdirected creates havoc. You know that? Don't let it happen in accounting. Okay. I want my SARS income tax at the beginning of the year. Once again, the famous questions that you ask yourself. What type of an account is SARS income tax? And your answer is, it depends. On what? On the balance that your SARS income tax has. Because it could be an asset or it could be a liability. In this case of ours, SARS income tax, beginning of the year, 8280 credit. So immediately I tell myself, fine, 8280 credit. Can you see? You don't need any details. You're doing a calculation, and that is important. Okay, closing, so we've got opening balance, done and dusted. Number 2, closing balance. What do I want? I look at my SARS income tax again, and I see a closing balance of 5220. Okay, so if that's my closing balance, 5220, remember a credit balance would be carried down on the debit side to be brought down on the credit side. So I've got my opening balance, I've got my closing balance. What's the next information that I require? I now need to know what was my income tax for the year, right? And immediately I go into my information, and my income tax for the year is 300,000. Okay, let's slot that in. With regards to my calculation, my income tax is 300,000. Why is that? Because my contra entry is a debit to income tax, a credit to SARS income tax. Understand that if you work from this perspective, using the T account, you can clearly see where your balances are, and yes, the missing figure would obviously be my bank figure. Let's do the missing figure. Let's calculate it. So we've got 300,000 plus 8280 minus 5220, and this will give me a figure of 303,060. Immediately I tell myself 303,060. That's my taxation paid. Now, we expect you to show calculations. Yes, so therefore, this calculation, if you want to show it in this way here, by all means do that. What is it? It's your 300,000 plus 8280. Clear? Can you see where it's coming from? 300,000 plus 8280 minus 5220. This is the calculation we expect you to show in your cash flow statement when you are working either taxation paid or dividends paid or any other item. Clear, guys? Okay. Now, we're not going to be working out all the components. We're going to be working out the important aspects, because obviously your cash from operating activities would now, you would take that figure, subtract your interest, subtract your dividend, and subtract your taxation. Obviously, you will notice in an exam that this is what we call a method mark. That means based on your operation. Once your operation is correct, you're going to get that mark. Let us rather deal with the calculations so we know how to arrive, because these are the ones that carry the major marks. And those are the ones that we want to master. Okay, when it comes to investing activities, based on the information that we have, we can clearly see that there's nothing about a fixed deposit, so there's nothing of concern, but there is something about tangible assets. Right, so immediately I tell myself, same story. Let's go in, and once again, what is it that we want to work out? We want to work out our tangible assets. Remember, it's at carrying value. So, step number 1, opening balance. Let's find my opening balance. Tangible assets, 1078840. So, let's slot it in. 1078840, 1078840. That's the opening balance of my tangible assets, right? So once again, look at the procedure, guys. Opening balance, done and dusted. Number 2, closing balance. What's the closing balance on my tangible assets? 3164420. 3164420. 3164420. Again,
Why on the credit side? Because obviously when I bring it down, it's going to be brought down below my trend lines. Obviously, that would be my balance brought down. So first the carry down and then the brought down balance. Okay, so I've got two components. I've got my opening balance and I've got my closing balance. What else do I need? When I'm working with carrying value, what else do I need in order to calculate the value of tangible assets purchased? Let's see from the information what I have. I've got depreciation of 124,280. Once again, 124,280. 124,280. That is my depreciation. Again, I'm showing you the T account as an explanation to you, and I will show you how to show this calculation in your cash flow statement. Okay, so I've got my opening balance, I've got my closing balance, I've got my depreciation. Was there a disposal? Let's check. I'm told that a vehicle was sold at carrying value for 80,000 Rand. No vehicles were purchased. But we do know that land and buildings were purchased for cash. No figure is given. So obviously, if no vehicle was purchased, you know that only land and buildings were purchased, but you did dispose of a vehicle with a carrying value of 80,000 Rand. Aha. Now, let's slot in the 80,000 Rand. Now, this is the information that you have. You now need to present this to show it as a calculation where in your cash flow statement. So you start off by saying 3164420. So obviously, this is your tangible assets that you purchased. And the figure we want is 3164420. I'm showing you your calculation. 3164420 plus. What else appears on the same side in that account? It's my 80,000 Rand, which was the disposal figure, 80,000, plus the depreciation figure of 124,280, 124,280 minus what was my balance at the beginning of the year, 107,840. 107,840. There's your calculation. Right. Take your calculator and say, fine. We say, start from the 3164420 plus add the 80,000 Rand plus the 124,280 minus the opening balance of 107,840, and voila, we have our answer, which is 2,289,860. Notice that's the value of the purchase of your tangible assets. Now, notice something else, that when you are working with your investing activities, it's your tangible assets purchased and your proceed from your disposal. In this case, it's been given to you. So obviously, these two figures added together would now give you your investing activities. Right. We move on to financing activities. What do we want in financing activities? What are the components we're looking at? We're looking at the shares. What do we know? That we had 200,000 ordinary shares which were issued at 4.30 Rand on the 1st of September 2013. So immediately you tell yourself, fine, take that 200,000 times 4.3, 4.30, and that will give you an amount of 860,000. Immediately you tell yourself, right, you've got your proceed of 860,000. What was that? The proceeds of my shares that were
sold. Okay, that's the one component. I also need to know two more components that need to be completed within the financing activities part of my cash flow statement, and that's the buyback and obviously the loan component. Let's see if we can find the loan component in this segment, right? If we look at our long-term liability, immediately I see that my loan was 760,000, is now 100,000. Obviously, the loan has decreased. And if your loan has decreased, it means that you have paid back the loan. So 760 minus 100, simple guys, 660,000. And here, you put in the 660,000. Remember, your loan has decreased, so it will be in a bracket. Aha, we've got one component left to calculate, and that is the buyback. You want to know more? The place to be is with us. So take a quick breather and we'll see you in a while. Welcome back, grade 12s. Yes, the buyback that we promised you about, here it is. Step number one, the most important thing when you are doing a buyback of shares is to calculate your average price, okay? And how do we do that? Watch. This is what we're going to say. We're going to say that our ordinary share capital at the beginning of the year amounted to 1,590,000. Okay? So let's take that figure of 1,590,000. Okay? And we add to it the further issue of shares. Did we sell more shares during the year? Let's check, because in our question, we've done something to that effect, where we sold more shares to the value of 860,000. Do you recall? Okay, so if we go back and we say, right, the new shares that were processed and sold to the value of 860,000, let's add that, 860, 1, 2, 3. This will give you a figure of 2,450,000. Okay, now, that's the total value of the shares that we had in terms of the shares that we have sold. Let's divide it by the number of shares represented. Remember, we had 500,000 shares which were in issue at the beginning of the year, and we sold a further 200,000 shares. Let's just verify if that is correct. We had 500,000 shares, correct, at the beginning of the year, and a further 200,000 shares were sold. Therefore, we said divide that by 700,000, okay? And this will give me a figure of 3 Rand and 50 cents. Now watch this here. If we look at the buyback of the share, we are told that 60,000 ordinary shares were bought back, and these shares were repurchased at 2 Rand above the average issue price. Okay? So this means, therefore, that our average that we worked out was 3 Rand 50. Okay? That was the average price, plus the 2 Rand would give you an amount of 5 Rand and 50 cents. Immediately I tell myself, okay, fine. Let's take that figure, 5.5, which is 2 Rand above the average price, multiply it by the number of shares that we are repurchasing, which is 60,000. Okay, times 60,000. And that will give me a figure of 330,000. Now, 330,000 would be my buyback of my share. Remember, it's at the price at which we bought back the share, and that was 5 Rand and 50 cents, which was 2 Rand above the average price. So important to note is that once you have all these components, right, that means you've got your operating activities,
you've got your investing activities, and you've got your financing activities. You add those components together, and that will give you your net change in cash and cash equivalents. Clear? Right. Then what do? You now bring back and say, right, I've got my cash and cash equivalents at the end of the year, right? What was my cash and cash equivalents at the beginning of the year? There's something very important that I want to illustrate to you guys here. Watch. My cash and cash equivalents at the beginning of the year has two components to it. What am I referring to? If I look at the end of the year, it's just straight 500,000 with nothing under a bank overdraft. So that's the figure that I use. But the beginning of the year has two components to it. And what are those two components? One is a cash and a cash equivalents of 5,000 Rand, and you've got an overdraft of 650, 640. For cash flow purposes, we need to combine these two components, right? And how do we combine them? By taking the bank overdraft of 650, 640. Let's do that. 650, 640, which is your overdraft, minus the cash that you have available. Once again, is that possible? Certainly it is. This 5,000 could have been your cash float or your petty cash. And therefore, your net overdraft would be equal to 645, 640, and that's the figure that you use in your cash flow statement. So please check it out. Don't just assume that if I'm looking at cash and cash equivalents, that it's only one figure. Always remember, look at the combination. Look for the bank overdraft. If there's no bank overdraft, hunky-dory, no problem whatsoever. But the moment there is, you want to reflect the net figure of the cash and cash equivalents as well as your bank overdraft. Okay, guys? Next question. So we're done with our cash flow question here. And we have a theory question here that says, what is the main purpose of a cash flow statement? You have exactly 1 minute to give me that main purpose. Go for it. Okay, guys, let's see if you have it. If you have, what do you have as the main purpose of your cash flow statement? Here goes. It provides users of financial statements with information on the inflow and the outflow of cash. It means within a company, there are limitations to your statement of comprehensive income. It cannot tell you what was the inflow and the outflow of cash. It tells you how monies were generated or spent and what the cash flow position is. It also accounts for the difference between your opening and your closing bank balances. At the bottom line of a cash flow statement, guys, is it explains the difference between your bank account opening balance and your cash and cash equivalents at the end of the year. Okay, we are given information now, and we have to work out what's the value of A, right? Let's look at it. A deals with land and buildings. Immediately we know with land and buildings, there's no depreciation, right? My opening balance is 3 million rand, okay? So, if my opening balance is 3 million rand, let's indicate that as our opening balance. We then compare it and see what is my closing balance. My closing balance is a value of 2,500,000. Okay? So, if that is my closing balance minus 2,500,000 as my closing balance, clearly I can see that my land and buildings has decreased. That's right. So, there must have been a disposal of land and buildings. Very often, grade 12s feel that you can only acquire land and buildings. No, you may need or arise at a situation where the company needs to dispose of land and buildings because we don't require it anymore, or whatever the reason may be. In this case here, you can see that we have generated cash to the value of 500,000 rand as a result of what? As a result of a sale of land and buildings. Okay, let's look at B. In B, we are expected to calculate the depreciation, and let's look at the information that we have. We are told that it's regarding our vehicle, and with regards to vehicle, a vehicle was sold at its carrying value on the last day of the financial year. In other words, we used the vehicle for the entire year. Depreciation is written off at 20% per annum, right? That's the rate of depreciation. On what method? On the diminishing balance method. Immediately, we say, fine, let's look at vehicles. Notice, with regards to vehicles, there was no additions, so that didn't change. You had a carrying value of 660,000, and that's what you require because it's the diminishing balance method. So immediately you say, fine, let's take our calculators and say, calculate 660,000 times my rate of my depreciation was 20% times 20%, and that gives me a value of 132,000 rand. Immediately, you can see you took your 660,000 times the 20%, and the value that you got was 132,000 rand. Okay, so you've got A and you've got B. Now let's look at C. What is it that we require? They want to know, what was your disposal at carrying value? Okay, so immediately you know that 660,000 was your carrying value at the beginning of the year, right? There were no additions at cost. You had depreciation to the value of 132,000 rand, okay, which you subtracted obviously, and you are left with a carrying value at the end of the year of 446,000 rand. I'm going to give you 1 minute to calculate that figure. Go for it. Okay, grade 12s, watch this here. You've got a carrying value figure of 660,000. Okay, let's take that figure. Take your 660,000, right, minus your depreciation, which you calculated to be 132,000. You recall, we worked out that figure already, right? Minus, what is my carrying value at the end of the year? 446,000. And that will give you a figure of 82,000 Rand. Now, obviously, the 82,000 Rand is your asset that you disposed of, and the carrying value of that asset was 82,000 Rand, because remember, this one here, it's disposals at carrying value. Okay, so clearly you can see that in terms of your fixed asset note, you need to understand that if you start off with your carrying value of 660,000 Rand, that figure continues, and you take the 660,000 Rand minus your depreciation, which you calculated, minus what your closing balance is, and that will then give you the missing figure. In this case here, the value was 82,000 Rand. Clear, guys? Okay, unfortunately, we're not going to get a chance to do D, but I'm sure you can work it out by yourself. Look at the question and figure it out. Yes, we've come to the end of our preparation, and we are obviously practicing, making sure that we are ready for the exams. And when I asked my crew with James and AB, and I asked them, what do they see in the skyline? And guess what was their answer? The answer was, shining, accounting stars. You will always be our shining stars. Until the next time, be good. Bye, guys.